Listen, I don't know what's happening, but something clearly is, okay? In today's video, we're going to take a look at what the next steps are for the market. Let's just get right into it, okay? Okay, so what do we have here? This is the 1 minute time frame of the S&P 500 futures. What do we have so far? Okay, so the market drowns in itself, rips to the upside, then it drops into the depths of hell again. And what does it do? It rips to the upside again. Clearly something is happening. I don't know how to describe it. This is basically the market is really trying its best to fight off this bearish momentum that we see. All right, so what we're going to do is let's take a look at this on larger time frames. Okay, so if you guys remember, I was saying how actually it's better on a SPY chart. Okay, so this is the daily time frame of the SPY. Just disregard all of the colors here, okay? What I was saying yesterday was the first day that we have an open outside of the lower level of the Bollinger Bands and a nice green candle like this, there's usually a second day that continues bullish as well. And you can see that today was that second day. Now, right, what is going to end up happening? So we had these 2 days of bullishness, essentially, that I was expecting. Apple also continued bouncing, right? Tesla also continued bouncing. The overall market, all of these large tech stocks got some love and then reverted back a bit. So now the question is, what is going to end up happening? Okay, so now immediately we're seeing that Apple, Tesla, and the SPY, the NASDAQ, the IWM, all of these stocks are trying to bottom themselves out. And you could see that the IWM was the clear victor. Now, the reason why the IWM is outperforming the NASDAQ and tech stocks is because this week is very important for IWM, economically sensitive bank stocks. BlackRock, State Street, JP Morgan, Citibank, Wells Fargo, all of these banks and hedge funds are reporting earnings this week. So heading into earnings date, there's an earnings run-up. So now, say, for example, we have earnings on Friday for a specific stock. The days preceding Friday, the price of the stock, in anticipation of the earnings, starts to do well. Then afterward, right, it's a toss-up. But the price heading into earnings day tends to be bullish. That is what we're seeing here on the IWM. And that's the reason why the IWM is outperforming the rest of the market. Now, we also have important news tomorrow morning. We've got CPI data coming out tomorrow morning at 8:30 a.m. That obviously is a very big news event for the market. So to really drive this home, I'm going to give you guys some context. Okay, so now the VIX is important. We monitor the VIX because it shows an inverse relationship to the market. If the VIX is falling, the market should be rising. And what I think is the VIX should continue falling. And if the VIX falls, then that is bullish for the overall market. Okay, now the VIX is not looking that strong, right? But then if you look at the stock market, if you look at the large tech stocks as well, you would be a fool to think that this is a really safe, automatically amazing spot to go long, because it doesn't feel like it. There's obviously very clear-cut bearish momentum that we're feeling. Yes, we're getting a lot of bulls to buy on the dips, right? Like earlier today, we got tons of buying. I showed it in the beginning of the video. We saw tons of buying and then a big sell-off and then more buying, etc. We're getting the buyers, but it's not a good sign that we're dropping so heavily, right? So that's why I'm saying we could feel the heaviness, right? The market is really rotating out. In my opinion, the market is rotating out of these large tech stocks and putting a lot of its money into the bank stocks. And now what's interesting is that we have CPI data coming out tomorrow. CPI is going to really impact these banks as well. And I wouldn't be surprised for us to continue falling lower. Personally, we had to go long. We had to lean a bit long, right? It is what it is because we were very overextended. But that doesn't automatically mean that the market is going to continue. It's going to continue. Like, it's going to just start bouncing. That's the issue here. That is the real issue currently, because if right now the market is bouncing primarily because of the Russell, okay? If the Russell was not bouncing, the tech would need to lead. And what we see currently, and the reason why I'm describing this in different parts is because the market takes turns bouncing or not bouncing, etc. So I wouldn't be surprised to see if the market drops. We had to lean a bit long. It is what it is. But it's tough to be completely bullish here. But I would not be surprised if we got another pullback down a bit lower on the SPY, closer to show you guys, so closer to the 570 area. I wouldn't be surprised if we get to the 568 to 570 area on the SPY. You can see that we filled the gap, bounced, great. We're holding above 580, holding above 582, spectacular. We're holding support, but we're not getting enough buyers, right? So now that is the only issue. We have to be essentially leaning long a bit, but even then, even as we fall a bit lower, these are all, in my opinion, these are buying opportunities. So far, right, we're taking it one day at a time. Essentially, what needs to end up happening is into Friday's close, if the IWM continues to rally, and then we get a bit of a pullback out of the IWM, I want to start seeing some strength out of the tech stocks. So NVIDIA, we need to start seeing some strength out of NVIDIA. It's a good sign that it held above 130, but this, we need to start seeing it rally above 136, 135. 143 is right around the corner. If Microsoft can get its act together, Microsoft can help propel the market up. It's a good sign that it held 410. All right, so Microsoft went to a major level of support that we've been talking about. It touched 410 and it bounced up. It's a good sign. Apple didn't even really retest into its wick, which is also a decent sign. It held the 230, 232, 233 level very, very well. This is also just the fact that Apple is holding support like this is a decent sign. And then, of course, Tesla was very, very bullish earlier in the morning. A lot changed afterward. But Tesla is still trying to hold its own also. Amazon also was holding the lows. Microsoft was holding the lows. Meta is holding above the bearish support level. This is not a time I would want to start being very, very bearish on Meta. I would rather see some sort of a bounce to around 610, and that would be a better spot to be short. But here's the thing. Like, in general, all of these stocks are at levels of support. They're not breaking support. That's the main concept, is they're not breaking support. Google actually, this sort of setup on Google gives a very, very good defined bearish setup. Google actually looks kind of bearish based off of this setup. But regardless, if, Google actually, in my opinion, it might be the most bearish setup that we have so far. But in general, you can look at it in multiple ways. This is still a bull flag. This is still a bull flag consolidating at a level of support. But just in general, we're feeling the bearish momentum. We're getting it a bit as well. But it's almost impossible to start leaning aggressively short. And that is one of the issues, because you can't really lean short when the market is at a level of support. The large tech stocks are holding support. The VIX is showing weakness. The VIX showing weakness is bullish for the market. Tech stocks holding support is also bullish for the market. The IWM rallying into earnings is also bullish. Tomorrow morning is going to be very, very important, but there are more reasons to be bullish down here than there are to be bearish. And regardless, this does not rule out the this does not rule out the possibility that we can make another low to the 568, 570 area. By all means, I definitely don't think that's off the table. Regardless, we have to take what the market is giving us. And I would rather be nibbling than missing a move. That's basically it. We're nibbling long rather than completely missing the move. And we've nibbled long many, many times. We would nibble if we end up making another low, still have the same bias. So say, for example, over here, we nibble, right? It makes another low, still have the same bias, and it ends up bouncing from there. Same concept. It is what it is. This, like, you don't, it's like looking at the market over here, right? Let's just zoom in here. Looking at the market over here. Okay. Nice and simple. Is this right here, is this where you start leaning short? No, of course not. Because if that was the place you would start leaning short, it would continue working, but it didn't. We ended up bouncing instead. We were bouncing to a level of resistance. And I think based off of just this bounce, we should see 586, 587. From there, the market would make a decision. So 586, 587 is still on the table in my opinion. But regardless, that would be a much better spot to short than down here. That's just my opinion. And based off of where it would be a good spot to go long and short, longing here worked out, right? But now you want to start taking profits up here into the 586, 587 area. That's where you would want to reshort. And it might not be easy. It might not feel correct because you could feel the bearishness. So it's going to feel like you're trading against the momentum, which is, it's a given. But it is what it is. That's when you catch the moves early, that's when you end up making the most money as well. So, but that's why in terms of risk management, that's why nibbling is very important. You need to nibble, and you can't be too aggressive trying to catch a bottom, and you can't be too aggressive trying to catch a top. That's why nibbling is very important. And yeah, I hope this makes sense. I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.